How you doing, everybody? It's Uncle Bruce here. Stock Markets with Bruce. How you doing this morning? Welcome to the show today. Today's date, Monday, May the 24th, 2021. I have contracts for post-merger IPOE. Will they automatically change to SoFi? Yes, they will. Everything you have in IPOE will become SoFi in name only. Everything else is the same. Yeah, except now the world will be exposed to SoFi as SoFi. Because right now, most people don't know SoFi is actually going to be IPOE. They don't get it. They don't know. You know, you're here, but the rest of the world doesn't know for sure. Some, but not all. Many will find out for the first time. Oh, IPOE was going to become SoFi the whole time? How come I didn't know? Because you didn't watch Uncle Bruce. That's why you didn't know. And you didn't have friends that referred you to Uncle Bruce, you loser. That's why you didn't know. Now you know. Go buy it at 28 bucks a share. We're happy you're here. Thank you, everybody. How do you feel about Chewy? Long term, I like it. I think the business brilliantly executed, created, found its niche, and will have a very solid future. But GameStop will do even better and will be more valuable in the long run. Anyway, there you have it. Do you play video games? No, I don't play video games. Never have. No, I used to put a quarter in, when I could play Space Invaders, you had the stick, and played Pac-Man. This is what, 83, 82, 84? Yeah, way back when. What's a good price to buy the call options at today? This is changing all the time, but right now, if you can get December 2022 50s, something like that, 2025s perhaps, like $25 contract. Keep an eye for those, but you want to get, you see a dip on this, jump into the 20s or 2250s if you can for December or January, next January, actually. That's where you want to be at least next January, Is IPOE still a buy now, or should I possibly wait for the dip? I have an extra 500. The game plan here, guys, is later this week, the shareholder meeting is concluded. It's SoFi later this week, starts trading as SoFi after the long weekend. Your time is running out to get in here under 20 bucks. Your time is running out. Don't be quibbling about pennies. This is about to go up in dollars. I don't know what anyone is waiting for. I have no idea what you guys are waiting for. There is no dip of any significance expected that I can see. None. Everyone who knows about IPOE knows it's going to become SoFi. It's just that the world at large doesn't know SoFi is actually taking over this company. They don't yet know that or appreciate it. You got a limited window here to buy some cheap stock. Whoever's selling this stuff they're crazy. They're crazy for selling it. But don't let me affect you. Bruce, first chance at a question. Bought my very first options ever the other day. VGAC, got 12 and a halves for mid-December. No way I'll have the money to exercise. So when would be a great time to sell them? Well, that's the thing. You don't have to exercise them. You're not going to exercise them. You're just going to sell the contracts for a profit and wait for the deal to go through. Let the merger happen. Let the new company, 23andMe, tell us what they're going to do. They're going to have $950 million. That is the most money they've ever had in their hand in one moment in time. They got plans. They've got plans. Let them announce the plans. Might take a month, might take 3 months, August, September, October. Let them talk. We'll follow it. See the shares go higher and higher and higher. There'll be a point in time where you'll go, I can't stand it anymore. I'm going to take my money off the table. We'll figure it out when we get there. But let's see what it does. It's not going to be $9.98 a share. I don't think so. When is it better to exercise a call contract rather than sell the call contract? If IPOE goes to 400 a share, it just takes off. Wouldn't owning it and selling covered calls be prudent? Well, look at it this way. Let's say you got a $20 call contract and your stock goes to $400 a share, okay? You have a call contract worth $380. If you sell it for $380 in cash, it's a $38,000 contract. If my math serves correct, $380 times 100, $38,000. You just turn around with the $38,000 that you now have because you sold the contract, buy the stock at 400, and you'll pick up about, I don't know, 90 of them or something like that. Find enough cash to get 10 more. Pick up another 10, and you've got 100 shares of IPOE at 400, trading at 400. Now you write call contracts against that. So if you exercise it, you need to come up with the amount. You better just sell the contract. Just sell the contract. Well, of course. Let's. I'm sorry. I got to figure out my head here. All right, you got a call contract. It's trading on the open market at 380. It's exercisable at 20. Okay. You can buy 100 shares for $20 a share, right? So that's $2,000 more that you have to come up with to do it. Okay. Go ahead and do that. Fair enough. You got 100 shares now. Write contracts, maybe 420s, 430s for a month or whatever. The market will tell you volatility-wise and action-wise and all that. Yeah. That's a way to go. Yeah, it's a way to go. Otherwise, you just sell it for a profit. If you buy a $20 call contract and the stock goes to 40, which is a little more realistic, goes to $40, your contract will go from maybe $3-4 in value to $24 in value. You make 6 times your money. Sell it for 6 times your money. You now have $2,400, or if you got 10 of these things, you got $24,000, and decide what to do with that money. You might put half of that money into stock, the other half of that money into contracts going forward as you roll over, or you will only put 3,000 or 4,000 into contracts going forward, and the rest will go just all into stock because you now want to become a shareholder to build a position for longer term, stability and not worry about the calendar, exercising dates, and expiring contracts. So yeah, that's a thought. Yes, you do. Yes, you do. If you can exercise a contract at $20 when the stock's at 40, you buy the stock at 20, you just sell the stock for 40, you made your profit. On the other hand, you sell your contract at like $22, you make $2,200 profit, because you'll not only get the difference between the exercise price and what the stock's trading at, you'll also get time premium on top of that. That's why you don't want to exercise it. Why exercise it and give away the time premium? If you're getting $2 a share time premium on top of the excess of the book value, sell the contract and just cash it in, and you've turned maybe a $200 investment into a $2,200 sale. Thank you very much. Bruce, if a market crash is imminent, as per online theory, what's likely to happen to IPOE and VGAC projections, etc.? Is that likely to plummet these prices again, having likely just increased these prices? Online theory? Really? Come on. Look, stocks go up, stocks go down. Markets go up, markets go down. Last week was a lousy week. IPOE went up last week in a lousy week. GameStop went from 160 to 178 last week in a lousy week. You tell me what the stocks are going to do minute to minute, day to day. I'll guarantee you this. If there's an absolute mega crash on the market, and I mean a 5,000 point drop on the Dow, everything goes down. I guarantee you that. But will it stay down, and for how long? All bets are off. Yeah, a market crash can happen. Sure. You can stub your toe walking across the street. Yeah, sure. Anything can happen. But counting on it, forget about it. Hey, Uncle Bruce, any idea what book value on VGAC and FAI will be on the merger? The way they got POE value 27. I've heard different numbers, but there's nothing official. Even on the SoFi, this is not official, guaranteed by anybody. This is analytical reports that are being made, and the analytics are going based on these numbers that these guys are generating. This company is worth this much money, and if you figure out the deal, the stock could be a $27 book value deal. So there is no guarantee. There will not be a guarantee. I'm just guessing and just getting the vibe that the shares are 1974 now. The deal happens later this week. It starts trading next week in the new deal. Down the road, it'll be higher, in my opinion, than $27 a share. I think it'll be higher than that. You take it for what it's worth. You play your games. Bruce is not to beat a dead horse, but I'm not understanding the math behind selling the contract rather than exercising it. If IPO does take off, would be tempting to exercise at least one, right? No, what do you think? Like I said before, if the shares go up, the contract goes up. And if you've got time left on your contract, let's say it's still got 3 weeks left, a month left, 3 months left, time, it'll trade at book value plus time premium. You give away the time premium if you exercise the contract. Why would you do that? That's stupid. Sell the contract at the full value of the contract, which is book value plus a premium, and then take that money, okay, and go buy the stock on the open market. Take that time premium, might be $2 a share, $200 a contract, 10 contracts, $2,000. The stock's trading at $40, $2,000 against a $40 contract. How many can you buy with that? 50 more. So take the money, $2,200, if that's what the contract's trading worth, and buy the stock. Instead of exercising it, you only have $2,000 worth of stock. Here you get $2,200 worth of stock. It doesn't pay to exercise. It pays to sell the contract in the open market for $22 a pop, or whatever the thing's trading at, $12 each for $22 each, and buy the stock. That's how you do it. That's why. I hope I'm getting through to you. I hope it's all right. I'm a new member. How exactly do the alerts come? I've never joined a membership like this one on YouTube. Yeah, I know. I'm a noob. Well, what'll happen is, David, you're probably getting announcements now. At least I hope you are. When I'm about to do a new show, my live show this afternoon, about an hour before I go live, I usually set the show up. And then I do an alert to everyone who's a member, who's a subscriber of this channel, all subscribers. And you probably get those. Those are like email alerts. You'll get it looks like an email alert, but it's actually a member alert for members only. You'll get those from time to time. So, every once in a while, you'll see something. So you'll know. Thank you, everybody, for that. If you'd like to talk to me about a 1-hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.